Hello friends, I hope you are all doing good. Welcome back. So in our previous class we were discussing about the revision. We were revising the topic of income from house property. So in this class also we'll continue that topic and complete income from house property. So in our previous class we have discussed that whatever rental income you are earning from house property, that will be taxable under the head income from house property if two conditions are satisfied. Condition number one, there should be a house property, and condition number two, the assessee should be owner of such house property. Who is telling this? Section 22, the charging section is telling this particular thing. So what do you mean by house property? House property means building a land pertinent to such building. So we had taken some good examples with regard to this point, and then we had also discussed about the types of house property. House properties can be of two types. One is let out property, another one is self-occupied property. Let out property is always taxable. Self-occupied property, check whether it is used for the business purpose or it is used for the residence purpose. If it is used for the business purpose, then please ignore it, and if it is used for the purpose of residence, then if you have more than two properties, then up to two it is exempt. More than two, whatever it is there, it will be taxable. So up to two self-occupied properties are exempt. More than two is treated as deemed to be let out property. And then we also saw how to compute the income from house property, wherein we had seen that while computing the income from house property, you are supposed to check, you are supposed to compare the expected rent with actual rent. Compare expected rent with actual rent. Whichever is higher will become your gross annual value. From this gross annual value, you are supposed to subtract municipal taxes, you will get net annual value. Subtract the deductions under section 24A and 24B, you will get your income from house property. Sir, how do I arrive at this expected rent? What do you mean by expected rent? Expected rent is nothing but municipal value plus fair rent, whichever is higher. Compare that with standard rent, whichever is lower. You will get your expected rent. Expected rent should be compared with actual rent. You will get gross annual value. Subtract municipal taxes from gross annual value. Municipal taxes can be subtracted only if it is paid by the owner. Municipal taxes is required to be computed on municipal value if it is given in percentage form. Then you will get net annual value. From net annual value, please subtract standard deduction and interest on loan. You will get income from house property. Then we had seen some format of income from house property. Then we also understood the meaning of actual rent. What do you mean by actual rent? Actual rent means rent received plus rent receivable minus unrealized rent. Whatever rent you have received and what is receivable minus the rent which you have not realized, unrealized rent. Unrealized rent can be subtracted if four conditions are satisfied. Condition number one, there should the tenancy should be bona fide. Condition number two, the tenant should have actually vacated the property. Condition number three, the tenant should have not occupied any other property of the same assessee. And condition number four, reasonable steps should have been taken for realizing the unrealized rent. Reasonable steps should have been taken by the assessee to recover that unrealized rent. Then we had understood about the deductions under section 24. There are two types of deductions which can be there are two deductions which can be taken. One is standard deduction, which is equal to 30% of NAV. You will not get deductions of repairs, maintenance, water charges, insurance charges, society fees, etc. Instead of that, you will get flat 30% deduction on your NAV. Whatever NAV you are getting, on that 30% flat deduction will be given to you. Then interest on loan. Then we had understood about interest on loan. If you have taken any loan from bank, financial institution, friends or family, it does not matter from whom you have taken. If the loan is taken for the construction and purchase of repairs, renovation of house property, then on such loan, whatever it is, interest is paid by you, that will be allowed as deduction under section 24B. Sir, how much interest will be allowed as deduction if your property is let out property or deemed to be let out property? Whatever interest is paid by you without any limit, entirely, completely, fully allowed as deduction. But if your property is self-occupied property, then in normal cases you will get the deduction of 30,000, and in special cases you will get the deduction of 2 lakh rupees. 30,000 is in normal scenarios and 2 lakh rupees is in special cases. When do I get this 2 lakh limit, sir? If the loan is taken on or after 1/4/1999, and if the loan is taken for the purpose of construction or purchase of house property, and if the loan is taken for the purpose of construction of house property, the construction should be completed within a period of 5 years from the end of the financial year in which loan was taken. Now please note, maximum deduction allowed for SOP, self-occupied property, is 2 lakh. Maximum interest allowed as deduction for self-occupied property is 2 lakh. So even if you have taken 2 or 3 loans on your self-occupied property, the maximum amount of deduction which will be given to you, which will be allowed to you, is only rupees 2 lakh. Okay, and then there is also a concept of pre-construction period interest. What do you mean by pre-construction period, sir? Pre-construction period. So I think we had discussed till the limit of interest. What do you mean by pre-construction period? So from this class, from this video onwards, we will be discussing about the meaning, the other topics, other leftovers of the income from house property. Then what is this pre-construction period interest, sir? What do you mean by pre-construction period or pre-acquisition period interest? Now sometimes what happens is, we take a loan from the bank for the purpose of purchase or construction of an house property, and there is a period. Say for example, we'll take an example of construction of house property. This is equally applicable for purchase of house property. Say for example, I had taken a loan from a bank of rupees 50 lakh. When did I took this loan, sir? I took this loan on 1st December 2019. The interest rate was say 10%. The interest rate for this particular loan is 10%. Now I had taken this loan for the purpose of construction of house property. When did I take this loan? In the previous year, 1920. Now as we all know, construction of a house property will it is not that construction will happen within a period of 1 month or 2 months or 3 months. So it requires its own time, depending upon what type of house you want to construct. So the house property which I am constructing, in my case, the house property which I am construction, it took a period of 3.5 years, 3.5 to 4 years for the purpose of construction. So now law says interest on house property will be allowed as deduction under section 24. Which type of interest? Interest on house property will be allowed as deduction under section 24. Now in my case, what has happened is, I have taken a loan on this in the year 1920, previous year 1920. Now that year I would have paid some interest. I have taken a loan of 5 lakh rupees. I would have paid 10% interest into, say in this previous year I would have paid interest for a period of 4 months. Now this interest of 1,66,667, will this be allowed as deduction to me? Because law says you can take the deduction, you can avail the deduction of interest only if you have a house property. Now in the present case, in the previous year 1920, I don't have any house property with me. What do I have with me? I just have a land wherein the construction activity has just now started. Now because I don't have a house property, the interest deduction of this amount will not be given to me. The interest deduction of this amount will not be given to me in previous year 1920. In previous year 1920. Similarly, I started the construction activity in 1920. In 2021, the house was half constructed. The house was half constructed. As you can see, the ground floor was construction and the construction of first floor was in process. The first floor was under construction. So that year I paid an interest of 5 lakh rupees. First year, that is the year in which I took the loan. In that previous year, I paid interest of 1,66,667. Next year, I paid an interest of 5 lakh rupees. Now the question is whether this interest will be allowed as deduction to me. Whether this particular interest which I have paid, will that be allowed as deduction to me? Answer is again no. In previous year 2021, they will not allow me the deduction of this particular interest. Sir, why will they not allow me to take deduction of this particular interest? Because deduction can be taken only when you have a house property. In the present case, your house property is not yet constructed, it is under construction. Because it is under construction, the house property is not completed yet. Since it is not completed yet, there is the deduction also will not be given to you. Similarly, in the previous year 21-22 also, the final touch-up was still pending. The house property was not fully completed. All the second floor it was completed, but it was not fully constructed. And finally, in the previous year 22-23, on 28th July 2022, my construction got completed. Construction of my house property got completed. Now construction of my house property got completed. Now since construction of house property got completed in previous year 22-23, no doubt that whatever interest I have paid in 22-23, that is 5 lakh rupees interest, which is for the year 22-23, that will be allowed as deduction. Why, sir? Because I have a house property. This interest will be allowed as deduction to me because I have a house property. Now the question is, what about the interest which is paid by me to the bank for this period. Which period? From the date of taking the loan till the date of construction. What lawmaker says is, lawmaker says, let us call it as pre-construction period interest, and we will give you the deduction of pre-construction period interest over a period of 5 years from the year when the construction got completed. Now the question is, sir, what do you mean by pre-construction period? Does pre-construction period means the period from the date of taking loan till the date of completion of construction? Does it mean the period from the date of taking loan, which is 1st December, till the date of construction getting completed? What do you mean by pre-construction period? Here the law beautifully says that pre-construction period means the period before the year in which construction was completed, the period or the years before which the construction was completed. Meaning, what you are supposed to do is, you will have to see in which year construction got completed. In our present case, construction got completed on 28th July 2022, which is falling in which year? Which is falling in the year 22-23. It is falling in the previous year 22-23. So pre-construction period in this case would mean the period starting from the previous year in which loan was taken till the end of the previous year before the previous year in which construction was completed. Sir, till the end of the previous year before the previous year in which construction was completed. So say for example, in the present case, construction got completed in the previous year 22-23. Before this, what are the previous year? Before this, what are the previous year? Before 22-23, what are the different previous year? It is 19-20, 20-21 and 21-22. These 3 years period will be taken as pre-construction period. It will be called as what, sir? Pre-construction period. I'll repeat. What do you mean by pre-construction period? Pre-construction period means the years before the year in which construction was completed. The years before the year in which construction was completed shall be called as pre-construction period interest. Whatever interest is accumulated for this, whatever interest is paid by you to the bank or financial institutions or any other person for these many years, that will be allowed as deduction to you in 5 equal installment. It will be allowed as deduction to you in 5 equal installment from the end of the financial year in which loan was availed by you. It will be allowed to you as deduction from the financial year, from this financial year when the house property got construction of the house property was completed. What do you mean by pre-construction period? Pre-construction period means the years before the year in which construction was completed. Construction was completed in previous year 22-23. Before this, whatever years are there, these years will be called as pre-construction period. Pre-construction period interest is required to be taken together, and that will be allowed to you as deduction over a period of 5 years from the year in which construction was completed. So if I just want to explain you this concept arithmetically in numbers, then see pre-construction period in the present case will be from which date to which date, sir? From the date of taking the loan till 31st December 2022, meaning construction was completed on 28 July 2022. So 28 July 2022 falls in previous year 22-23, and this previous year starts from which date? 1st April. So before this, what was the previous year? 21-22. When did this previous year 21-22 end? It ended on 31st March 2022. So the period till 31st March 2022, from 1st December 2019, from the date of taking the loan till 31st March 2022, till the end of the previous year in which before the previous year in which loan was the construction was completed, that period will be called as pre-construction period. It will be called as pre-construction period. Now since this is the pre-construction period, you should check what is the interest for this pre-construction period. The amount comes to 11,66,667. This will be allowed as deduction to you in 5 equal installment starting from the year in which the construction was completed. So just to explain this, say these are the different years. As you can see over here, these are the different years: 1920, 2021, 21, 22. So these 3 years combined together, it will be called as what, sir? Pre-construction period. It is pre-construction period. Whatever interest is paid by me for this particular period is called as pre-construction period interest. That will be allowed as deduction to me in 5 equal installment. So in the year in which construction got completed, which is nothing but previous year 22-23, I will get the deduction of interest for that particular year's interest deduction I will get, plus I will get proportionate one portion of deduction of pre-construction period. So this interest is 5 lakh rupees, which you are seeing over here, is interest for previous year 22-23, and 2,33,333 rupees is pre-construction period interest, which is apportioned to this particular year. It is required to be distributed to 5 years. For this year, the proportionate amount comes to 233. So total interest for this particular year, for previous year 22-23, will be 7,33,333. Now, sir, how much interest deduction will I get? Sir, I got the interest amount. How much interest deduction will I get? So it depends on the property. So if your property is self-occupied, then you will get deduction of 2 lakh rupees or 30,000 rupees, depending upon what type of 2 lakh or 2 lakh rupees or 30,000 rupees, depending upon whether it is falling under normal case or special case. And if it is a let out or deemed to be let out property, you will get the interest, whatever interest is paid by you, it will be fully allowed as deduction, which is 7,33,333 rupees. So it depends completely on what type of house property you have. So there are some beautiful questions which you can just go through. So let me straight away focus on the next concept. There is one question, example number 3 from your ICAI material, CA Institute material. Very good question, Mr. Manas question. You please have a look into this question. In this question, this person has 2 properties. Both the properties are self-occupied properties. He has taken 2 separate loans. One loan is taken for construction purpose, another loan is taken for the purpose of repairs. Now the question is, how much interest will be allowed to you as deduction? Now basically, for construction you get 2 lakh rupees interest deduction, and for repairs you get 30,000 rupees interest deduction. So totally the interest amount comes to 2,30,000 in this particular case. But a maximum deduction allowed for a self-occupied property is how much, sir? 2 lakh. So in this case you will get maximum interest deduction of how much, sir? In this case you will get maximum interest deduction of 2 lakh rupees. In this case, maximum interest deduction, how much you will get? 2 lakh rupees. Okay, let us come to the next concept. Next concept is what, sir? Next concept is concept of vacancy. Nice concept, tricky concept. In examination, students get confused with respect to this particular concept. Now, what do you mean by vacancy? Vacancy means emptiness. For example, if you are working in a particular company, if you are working for some company, if there is a position which is vacate, meaning if there is a person who has left the job, say for example there are totally 4 employees in a company. So if one employee leaves the job, then his position will be vacate now, his seat will be vacate now. Just like that. Vacancy means the house property is vacate, or the house property is empty for some period of time. For example, there is a house property which I had let out. I had let out this house property from 1st April 2022 till 30th September 2022 for a rent of 10,000 rupees. Now this tenant to whom I have rented this property vacated the property. He left the property on 30th September. Now the next tenant came to the house on 1st December. Next tenant came to the house on which date, sir? 1st December. So if you can see over here, from 1st October till 30th November, from 1st October till 30th November, the property was not occupied by anyone. The property was not occupied by anyone. This letter of property was not occupied by anyone. This period of 2 months will be called as vacancy period. This period of 2 months will be called as vacancy period. Now it will be said that the property was vacant for a period of 2 months. This is called as what, sir? Vacancy period. Now what will happen? Sir, if a property is vacant, how do I compute the income from house property? How do I compute the income from house property? That is what we are going to see in this particular topic now. Now, please note, vacancy does not mean unrealized rent. Vacancy does not mean unrealized rent. Vacancy means there was no person who occupied the property. The property was unoccupied. It was unoccupied. It was not occupied by anyone. But whereas unrealized rent means the property was occupied by a person and he did not pay me the rent for that particular period. He did not pay me the rent for that particular period. That will be called as what, sir? That will be called as unrealized rent. Unrealized rent does not mean it is vacancy period rent. Now normally if I want to find, see, whenever there is a concept of vacancy, what happens is what is required to be taken as gross annual value is the question. Now just to explain you this concept in brief, normally what is gross annual value? Normally gross annual value is what amount, sir? It is expected rent or actual rent, whichever is higher. What is gross annual value? It is expected rent or actual rent, whichever is higher. Here, whenever there is a vacancy, that time also, in case of vacancy also, when your property is vacant, that time also you are required to do the same thing. You are required to compute the gross annual value. You are required to compute the gross annual value. What is gross annual value? Gross annual value is nothing but expected rent minus actual rent, whichever is higher. So when you are comparing both of these, if your expected rent is higher, when you are comparing your expected rent with your actual rent as if there is no vacancy, take your actual rent as if there is no vacancy. So compare your expected rent with actual rent as if there is no vacancy. Compare both of them, whichever is higher. Check whichever is higher. If your expected rent is higher, then your gross annual value will be equal to expected rent. If your expected rent is higher, then what will happen, sir? Then gross annual value will be expected rent. However, if actual rent is higher, meaning actual rent without considering the vacancy period, as if there is no vacancy, if your actual rent is higher, then the gross annual value, when you are comparing both of this, when you are comparing expected rent with actual rent, if your actual rent is higher, in such cases your gross annual value will be equal to actual rent minus vacancy period rent. Actual rent minus vacancy period rent. I'll repeat. What are you supposed to do? You are required to compare whatever you were doing all these days, you are required to do the same thing. You are required to compare expected rent with actual rent and check who is higher. If your expected rent is higher, then your gross annual value will become what, sir? Your gross annual value will become expected rent. And if your actual rent is higher, here what do you mean by actual rent? Here actual rent means your rent without considering the vacancy, meaning actual rent which you would have received if there was no vacancy, actual rent which you would have received if there is no vacancy. Compare both of them, see whichever is higher. If expected rent is higher, then expected rent shall be taken as gross annual value. If actual rent is higher, then your actual rent minus vacancy period rent will be taken as gross annual value. In short, if your actual rent is higher, then your actual rent received will be taken as gross annual value. Your actual rent received will be taken as gross annual value. It will be taken as gross annual value. This is in short the concept of
vacancy. This is in short the concept of vacancy. Let me just give you an example. Say for example, example number 1, I had let out the property, my expected rent is 3 lakh rupees. I had let out the property for 30,000 rupees per month. I had let out the property for 30,000 rupees per month, and the property was vacant for a period of 3 months. So what will be my gross annual value? My gross annual value will be 2,70,000. Sir, how is it 2,70,000? Again, compare expected rent with actual rent. Actual rent as if there is no vacancy. So expected rent is how much? 3 lakh rupees. Actual rent as if there is no vacancy. Vacancy period is 3 months, but I'll take actual rent as if there is no vacancy. So I'll compare both of them. 3 lakh, 3,60,000, whichever is higher. Who is higher? Actual rent is higher. So if actual rent is higher, what will be my GAV? GAV will be equal to actual rent minus vacancy period rent. If actual rent is higher, just now we had seen this, if actual rent is higher, my gross annual value will be what, sir? Gross annual value will be actual rent minus vacancy period rent. Actual rent minus vacancy period rent. Therefore, in the present case, actual rent minus vacancy period rent, that is 3,60,000 minus 90,000 comes to 2,70,000, or you can directly take actual rent received, which you have actually received. 30,000 into 9 months rent you have actually received. Example number 2. Your expected rent is 3 lakh rupees. Your actual rent is 2 lakh rupees. What is your expected rent? Your expected rent is 3 lakh rupees. Actual rent is 20,000 rupees. Sorry. Actual rent is how much? Actual rent is 20,000 rupees per month, and your vacancy period is 1 month. What is your gross annual value? Sir, again compare expected rent with actual rent as if there is no vacancy. 3 lakh rupees is required to be compared with 20,000 rupees per month into 12 months. You will get how much, sir? 2,40,000. Now compare both of them. Who is higher? Sir, your expected rent is higher. Actual rent without taking the vacancy, I mean actual rent as if there is no vacancy, if I take, it comes to 2,40,000. Compare that with expected rent, which comes to 3 lakh rupees. Because 3 lakh is more than 2,40,000, your 3 lakh will become your gross annual value. Last case, sir, what if both are equal? What if expected rent and actual rent are equal? Say for example, your expected rent is how much? Your expected rent is 2 lakh rupees, your actual rent is 25,000 rupees per month, and vacancy period is 4 months. Now if you see actual rent and expected rent, if you compare both of them is 3 lakh rupees. In such cases, what will be the gross annual value? In such cases, gross annual value will be your actual rent minus vacancy period rent. In such cases, your actual rent minus vacancy period rent will be taken as gross annual value. Your actual rent without considering the vacancy period comes to 3 lakh minus vacancy period rent, which is 1 lakh. Gross annual value is 2 lakh rupees. Now, what if my property is a partly let out property? What if this property wherein I am staying is a partly let out property? Sir, what do you mean by partly let out property? Meaning the property is, some portion of the property is let out, some portion of the property is self-occupied, or the house property was let out for some period of time, and for some period of time it was self-occupied. So here we are going to see the concept of partly let out property. So when I say partly let out, that means it is partly self-occupied. When I say partly let out, it indirectly means that the property was partly self-occupied. Now partly let out property can be of two types. Partly let out property, the partly letting out can be in two ways. You are letting out some part of the area, so it can be area wise let out, or it can be time wise let out. The property was let out for some specific period of time and then it was self-occupied, or some portion of the property was let out. So partly let out can be time wise or area wise. If it is area wise, meaning what, sir? Say for example, I have this house property. If the partly let out property is what, sir? Area wise. Say for example, I have this house property. This house property, 60% of the house property is self-occupied by me, 40% of the house property is let out by me. I have rented 40% of this particular house. 60% I am only staying, and there is one room which has a separate door which I have let out. 40% of the property is let out by me. In this case, how do I do computation? How do I do the computation of income from house property, sir? When the property is let out partly and partly it is self-occupied area wise, when it is partly self-occupied and partly let out area wise, you are supposed to take everything in that proportion, in the proportion of let out and self-occupied. Everything you are required to take in the proportion of let out and proportion of self occupied. Sir, what do you mean by everything? You are required to take the municipal value, fair rent, standard rent, municipal taxes and interest in the proportion of let out. You are required to take in the proportion of let out, meaning how much, whatever is allocated to self occupied, give it to self occupied, whatever is allocated to let out, please give it to let out. So municipal value, fair rent, standard rent, municipal taxes and interest is required to be apportioned between self occupied and let out portion separately. Sir, what about actual rent? Am I not supposed to apportion the actual rent? Obviously no. Why, sir? Because actual rent you are going to receive only for the let out portion. No, see, rent you are going to receive for which portion? Only the let out portion. Apart from actual rent, whatever else is there, please apportion everything. Whatever else means municipal value, fair rent, standard rent, municipal taxes, interest, etc. These are required to be apportioned proportionately. For example, if the question says municipal value is 1 lakh, obviously it means that the municipal value of this house property is 1 lakh. When the question says municipal value is 1 lakh, they mean that the municipal value of this house property is 1 lakh. In such cases, you are required to divide it. 60% give it to self occupied, 40% give it to let out. Sir, in the exam, is this the standard rule that I should take 60-40? No. In examination, they may give that 50% is let out, 50% is self-occupied. So, depending upon the question, you are required to answer. So, I have taken an example wherein 60% is let out and 40% is self-occupied. Now, sir, how much interest deduction will I get? Interest deduction, how much will I get? See, interest again, same concept of interest is same. For self-occupied, limit of 2 lakh or 30,000, and for let out there is no limit. Deemed to be let out, there is no limit, fully allowed. For example, say for example you are paying an interest of rupees, for your property you are paying an interest of rupees 6 lakhs. Now how much will be allowed as deduction to you? You are paying an interest of how much, sir? You are paying an interest of rupees 6 lakhs for your property. How much will be allowed as deduction? Now 6 lakhs is the total interest. Okay, 6 lakhs is this total interest. 60% will go to self-occupied, 40% will go to let out. In my example, 60% will go to self-occupied and 40% will go to let out. So 60% comes to 3,60,000 goes to self-occupied and 2,40,000 will go to let out property. Now, for self-occupied, maximum interest deduction, how much can you take, sir? Maximum interest deduction for self-occupied which can be taken is 2 lakh rupees. Therefore, even though you have paid 3,60,000, maximum interest which will be allowed to you as deduction is 2 lakh rupees. And for this let out property, the proportionate amount comes to 2,40,000. Since there is no limit, you can take it fully. This was with respect to what, sir? This was with respect to partly let out and partly self-occupied area wise. Now, what if my property is partly let out, partly self-occupied, time wise? Say for example, I have an house property at Jaipur. Now, all these days I was staying in Bangalore. Now, recently I have moved into Jaipur. Say for example, I have moved into Jaipur. Now, because I have a property at Jaipur, this property, I am staying in Bangalore. I am staying in Bangalore. This property which is there at Jaipur, no, I had rented it to someone. I had rented this property to someone. Now, I had told my tenant that from 1st December 2022, I am going to come and stay in Jaipur. So, I want you to please vacate the property by this particular date. So, this property was let out from 1st April 2022 to 30th November 2022. This property was let out for a period of 8 months, and after that, after this particular period, from 1st December, this property was self-occupied. So now what is happening in this question? This entire property, not a portion of the property, entire property was let out for a period of 8 months. Entire property was let out for a period of 8 months, and thereafter it was self-occupied by me. So now this property is partly let out, partly self-occupied, time wise, partly let out, partly self-occupied, time wise. Now what is required to be done in these cases, sir? In these cases, now what law says is, if the property is let out time wise, partly let out and partly self-occupied time wise, then you are required to assume that the property was let out for the entire year. Assume that the property was let out for full year. It is required to be treated that the property was let out for full year, and accordingly you are required to compute the you are required to compute the income from house property. So what assumption is required to be done over here? You are required to assume that the house property was let out for full year, and accordingly you are required to compute the accordingly you are required to compute the income from house property. Sir, what do you mean by this? This in short means that whenever you are going to take municipal value, fair rent, standard rent, municipal taxes, etc., you take it for the entire year. Whenever you are going to take these amounts, no, take it for the full year. You are not required to do, say your whenever you are in the question it is given that municipal value is 1,20,000. 8 months it was let out and 4 months it was self-occupied. So here you are not required to do that 1,20,000 into 8 by 12. No, this computation is not required to be done. Take entirely, completely full amount of how much, sir? 1,20,000 is required to be taken by you, and accordingly compute your income from house property. Meaning, treat this property to be let out for entire financial year and accordingly compute the income from house property. But please note, actual rent, no, whatever actual rent you have actually received, only that will be taken. Meaning actual rent will not change. You have letted the property for 8 months, so actual rent you would have received only for 8 months. So in this case, actual rent should not change. Actual rent will be whatever actual rent you have actually received. So it is not required to be treated, sir, since the property is treated as let out for the entire year, actual rent also I'll take it for 12 months. No. Actual rent is whatever amount you are actually receiving. You have received it for 8 months, take the actual rent for 8 months. But municipal value, fair rent, standard rent, that you should take for entire year. Now just to explain you this concept, let me just take up this question. Prem owns a house property in Madras during the previous year 22. In the previous year 22-23, two-third proportion of the house was self-occupied, 1/3 of the portion of the house was let out for a rent of 8,000 per month. Municipal value is 3 lakh, fair rent is 2,70,000, standard rent is 3,30,000. He paid a municipal taxes of 10%, and the loan of 25 lakhs was taken in 2018. The interest paid on loan for this particular year is 1,20,000. Compute income from house property. Now in this case, this house property is let out area wise. 1/3 is let out, 2/3 is self-occupied. 1/3 is let out, 2/3 is self-occupied. So everything, municipal value, fair rent, etc., everything is required to be taken in this proportion. So obviously self-occupied portion, everything will come 0, 0, 0, 0, 0, because self-occupied income from house property, in case of self-occupied house property, you are not required to take any municipal value, fair rent, etc., because it is occupied by yourself. Only thing which you can take as deduction is your interest. How much proportion interest, sir? So in the present case, you have total interest of 1,20,000 into 2 by 3, which comes to 80,000 rupees is for self-occupied, and balance 40,000 rupees is for let out portion. So accordingly, for self-occupied property, you are going to get how much, sir? 80,000 rupees loss. Let out, what am I supposed to do for this let out property? For this let out property, municipal value, how much municipal value am I going to take, sir? Municipal value, you are going to take municipal value of how much? 1 lakh rupees. How, sir? 1 lakh rupees, 3 lakh is the municipal value which is given in the question, into 1 by 3, proportionately 1 by 3. 90,000 is given, 2,70,000 is given, proportionately 90,000 is required to be taken. Similarly, take everything proportionately. For let out portion, take everything proportionately, but please make sure actual rent will be only for the period for which it was let out. 8,000 rupees is the actual rent. The property was let out. I have written it over 12 over here. 8,000 is the actual rent. Actual rent is how much, sir? 8,000 rupees. The property was let out. Proportionate let out. Correct. The property. Now 8,000 in this case, sorry, I got confused with the time wise let out, because it is area wise, it is everything is required to be taken. Actual rent, how much you have received, sir? 8,000 into 12 months. I have received 12 months rent, so I'll take entire 12 months rent. So I'll get income, I'll get gross annual value, and then accordingly subtract municipal taxes and standard deduction. You will get your income from house property. You will get your income from house property. Now there is one more question. This question. Okay, this is also a similar question, so let me not discuss this. In this case, what has happened, sir? In this case, it is 50% self-occupied, 50% let out. I'll take Rajalakshmi's question. Rajalakshmi's question. In Rajalakshmi's question, what has happened? In case of Rajalakshmi, what has happened, sir? Srimati Rajalakshmi owns a house property at Adyar in Chennai. Municipal taxes, etc. is given. What have they given this? That this property was let out for a rent of 50,000 rupees up to December 2022. Thereafter, the tenant vacated the property and Srimati Rajalakshmi used the house for self-occupation. So in this case, what has happened? The property was let out till December. For 9 months period, the property was let out, and after that, from January months onward, it was self-occupied by the Rajalakshmi. Therefore, this property is let out for 9 months, and for 3 months it is self-occupied. Now, this property is let out time-wise let out, partly self-occupied, time-wise. In such case, what you are required to do? You are required to treat that the property is let out for the full year. Accordingly, you are required to compute the income from house property. So, whatever you are going to take, you are going to take completely. You are going to take completely as if the property was let out for full year. Meaning, municipal value they have given 5 lakh rupees. You are required to take 5 lakh. 4,20,000 fair rent, 4,20,000 fair rent. 4,80,000 rupees is standard rent. 4,80,000 is standard rent which you are supposed to take. What will be the actual rent, sir? Actual rent is whatever amount you have actually received. You have received the rent for 9 months, correct? So it will be for 9 months. 9 months into 50,000 rupees. Minus there is 2 months rent she has not paid. 2 months rent she has not paid. They say that rent for the month of November and December was not paid in spite of efforts. So 2 months rents, because it is not paid, it is unrealized rent, minus 2 months rent. The amount comes to how much? The amount comes to 3,50,000. This is what you are required to. This is actual rent. Compare both of actual rent with expected rent. Whichever is higher is 4,80,000. Accordingly, you will get income from house property. Okay, so let us go to the next concept. What is the next concept, sir? Next concept is about what if I have more than 2 self-occupied property? Normally you can have how many self-occupied property? You can have maximum 2 self-occupied property. In such cases, they will be exempt from payment of taxes. You don't have to pay any taxes on the self-occupied property. Sir, what if I have more than 2 self-occupied property? If you have more than 2 self-occupied property, then as we all know, whatever is in excess of 2, that is required to be taken as deemed to be let out property. Whatever is there in excess of 2 shall be taken as what, sir? Deemed to be let out property. Now the question is which property will be taken as deemed to be let out property? Since I have 3 properties, say for example I have 3 self-occupied property. Now A, B and C. Now sir, which property should I take it as deemed to be let out property? Which property should I consider self-occupied? Which property should I treat it as deemed to be let out property? For this you are required to do the computation. Meaning what, sir? You should compare all of this. You should compare all of this and check where your income from house property is minimum. Because if your income is less, your income tax will be less. If your income is less, your income tax is going to be less. Sir, just let me explain it again, sir. Now I have 3 properties which is self-occupied by me. I have not given any of this property on rent. So what am I supposed to do? I should compute the income from house property for all this property. How, sir? By taking these 3 options. What are the options? First, treat house property 1 and house property 2 as self-occupied, house property 3 as deemed to be let out property. See what is the answer you are going to get. Then check option number 2. What is option number 2? House property 1, house property 3, treat them as self-occupied, 2 will be taken as let out property. Option 3, take first property as deemed to be let out and second and third as self-occupied. So you are required to do this. You are required to compare and check in which scenario, which option is my income from house property less, which option gives me the least income from house property, that will be taken, that option will be selected by me, So there is a question from your institute material. If you see this particular question, now how do I compute this, sir? The best way of doing is compute the income for all the property if they were self-occupied, compute the income from all the property if they were let out. So once you compute this, then enter everything in your options. Then enter house 1, house 2, house 3. Treat first 2 houses as self-occupied, last one as let out property. See what is your answer. Take 1 and 3 as self-occupied, second one as let out. What is your answer? Take first one as deemed to be let out property and second and third as self-occupied. See what is your answer. Now if you see in my case, if I select option 1, I will get loss of 41,500. If I select option 2, I will get loss of 1,06,400, and if I select option 3, I will get loss of 1,30,400. So in income tax, whenever there is a loss, I am very happy because I don't have to pay income tax. And now which option will I select? Obviously I am going to select that option where I have maximum losses, option number 3, because I don't have to pay any taxes and I can also set off this loss with other incomes. Please have a look into this particular question. Very beautiful question, very good question. Mostly I have seen, see, first question which is there, that is an institute material, CA institute material question, very easy question. Now this question which I am showing you, that is from your CMA institute, that is from your CMA institute, question number 50. Question number 50, Mr. Pandey, illustration 50, Mr. Pandey. Very nice question. I am sure that most of the student will answer it wrong. Most of the student will answer it wrong. Okay, what I'll do is I'll upload this material as well. I'll upload this entire material, this PDF, whatever PDF is there. No, this is something which I had. This is notes of my classroom, so I'll upload it entirely, so you can see all the questions also and the provisions also. Now the next concept in income from house property is co-ownership or joint ownership concept. Very simple and very easy concept. Co-ownership or joint ownership. What do you mean by co-ownership or joint ownership? If there are 2 or more owners for a house property, if there are 2 or more owners for a house property, then it is said that it is co-owned property or jointly owned property. For example, you would have seen, say your houses, maybe it is co-owned by your parents, your father and mother together, they are owning the property. Okay, so say in this particular case, in our example, joint ownership or co-ownership. What do you mean by joint ownership or co-ownership? Joint ownership or co-ownership means property is owned by more than one owner. Property is owned by more than one owner. So we have a house property. There is a house property which is owned by Dilip as well as Nora. So Dilip and Nora both have 50% right in this property. So this property 50% ownership belongs to me and 50% ownership belongs to Nora. Now sir, how will you compute the income from house property? In whose hands will the income from house property will be taxable? Will it be taxable in Dilip's hand or will it be taxable in Nora's hands? Whose hands will this property, the income from this property, be taxable? Now law says you don't have to worry. You don't have to do any you don't have to worry about this. You don't have to think hard on this particular point. You just compute the income from house property as if there was no co-ownership. You are required to compute the income from house property as if there is no co-ownership. Compute the income from house property as if there is no co-ownership. Whatever income from house property you are getting, distribute that to Nora and Dilip, that is the co-owners. It can be more than 2 also. Okay, distribute it to the co-owners in the ratio of their ownership. In the ratio of their ownership. Say for example, in this particular case, I am required to compute the income from house property. Whatever income from house property I am getting, compute as if there is no co-owner. Okay, compute that income from house property. Whatever income from house property I am getting at the end, the final answer which I get, distribute that amount, give that income in the ratio of ownership to Dilip as well as Nora. Sir, what do you mean by this? Now say for example, here we have done some computation, right? Now see here, 47,000 is income from house property. Assuming this property was in co-owned property, then this there are 2 owners having 50% share. This 47,000 will be divided between both the co-owners. It will be divided, meaning computation is required to be done normally. Whatever answer you are going to get, that is required to be apportioned or distributed between the owners in the ratio of their ownership. Now here one of the best advantage of co-ownership, co-owned property. Sir, what is the reason that my parents have co-owned property, sir? Sir, what is the reason that mostly the properties which I am seeing is co-owned, sir? The reason is interest. The reason is what, sir? The reason is interest. In case of co-ownership, co-owned property, what happens is the interest deduction, if it is obviously let out or deemed to be let out, you don't have to worry, it is fully allowed as deduction. But if it is a self-occupied property, the limit of 30,000 and 2 lakh rupees will be given to each co-owner. The limit of 30,000 and 2 lakh rupees will be given to each co-owner. Whatever limit you are seeing, no, that limit of 30,000 or 2 lakh rupees, it will be given to each co-owner. It will be given to each co-owner in case of co-owned property. Meaning, whenever you are computing, Dilip's share of interest will be given and Nora's share of interest will be given. Total, say for example, total interest paid by you is 3 lakh rupees. Normally, if it is a self-occupied property and owned by one person, it is not a co-owned property. If he pays an interest of 3 lakh, how much deduction will he get? He will get deduction of only 2 lakh. But if it is jointly owned or co-owned property, this in 2 lakh rupees limit will be given to all the owners. If there are more than 3 owners, 4 owners, 5 owners, all the owners will get 2 lakh rupees benefit. So here, if I have paid 3 lakh rupees interest, Dilip will get 1.5 lakhs, Nora will get 1.5 lakhs. This interest entirely will be allowed as deduction because Dilip can take benefit of 2 lakh rupees, Nora can take benefit of 2 lakh rupees. Sir, what if I have paid an interest of 5 lakhs? Dilip's share is 2.5 lakhs, Nora's share is 2.5 lakhs. Dilip can take maximum 2 lakhs, Nora can take maximum 2 lakhs. So total 4 lakhs rupees will be allowed as deduction. Okay, then one more topic is there. This topic is with respect to arrears of rent. What do you mean by arrears of rent? Next concept is with respect to what, sir? Arrears of rent. Sir, what do you mean by this arrears of rent? Sometimes what may happen is the rent is not paid to you. Sir, does not that mean that it is unrealized rent? No. There is a difference between unrealized rent and arrears of rent. Unrealized rent, the tenant has not paid that rent to you at all. But arrears of rent is a rent which is under dispute. Arrears of rent is what, sir? It is the rent under dispute. Say for example, you had increased the rent. So in this example, what has happened is I had given the property on rent for 15,000 per month. Then I had increased the rent. Okay, I had given the property on rent for 15,000 per month from first, which date? From 2nd of October, from 1st of October basically, from October month I had increased the rent to 20,000 rupees. I had increased the rent by 5,000 rupees. Now, this 5,000 rupees rent which I had increased, no, the tenant did not pay me. The increased rent was not paid by the tenant. So, I filed a case against the tenant and finally meaning the tenant was not agreeing to pay this amount because the tenant told that no sir, there is no contract that you had increased the rent, etc. So this rent was under dispute. Finally we went to the court and the court finally told that yes, this rent is required to be given to Mr. Dilip. So what will happen in such cases? What will happen when you recover arrears of rent? I hope you have understood the meaning of arrears of rent. In simple words, arrears of rent means rent under dispute. Arrears of rent means what, sir? Rent under dispute. Sir, what will happen whenever there is an arrears of rent? In case you have arrears of rent, it is taxable when it is received. See, arrears of rent is normally not taxable. When is it taxable? Whenever you are going to receive this amount, whenever you are going to receive this amount in future, on that date, this amount will be taxable. This arrears of rent will be taxable. Sir, how much will be taxable? Whatever amount you have received into 70%. Whatever amount you have received into 70%. In simple words, they are giving the benefit of standard deduction of 30%. In simple words, whatever rent you have received minus 30% standard deduction, that is taxable. So amount received into 70% will be taxable. Arrears of rent means rent under dispute. Then Again, now all the theoretical concepts of income from house property comes into picture. Now these concepts are basically theoretical concept, and obviously there may be a problem also with respect to this point, but yeah, let us discuss next concept. Next concept is what, sir? Concept of composite rent. Sir, what do you mean by composite rent? Composite rent means your house property, you have rented or let out the house property with some other assets. If you have rented your house property with some other asset, then it means it is whatever rent you are receiving is nothing but your composite rents. Sir, renting of an house property with other assets. Renting of an house property with other assets. Mostly you would have seen would have seen people renting their property and telling that this property is a furnished property, it is semi-furnished property. You take this property on rent, you will get washing machine, fridge, AC installed, pre-installed, you will get wardrobes, etc. pre-installed, you don't have to get anything. So this is a fully furnished property, it is semi-furnished property, something like that. So in that case, what are you getting? You are getting a property on rent with other assets also. You are getting a property on rent with other assets also. So say for example, if the person says the rent is 15,000 rupees, if he says the rent is 15,000 rupees, now the rent of 15,000 rupees is for house property as well as other assets. Totally you are paying 15,000 rupees. Now the question is how much will be taken as income from house property, how much will be taken as income how much will be taken as income for the other assets which is given by me. Here the law says do a simple calculation, do a simple check. What am I going to check over here? Check whether the composite rent is separable or not separable. Check whether you can separate this 15,000 I am giving the property on rent, fully furnished property on rent, wherein I have given the house along with television, washing machine, refrigerator, AC. I have given this property on rent and I am charging 15,000 rupees rent, and I am charging rent of how much, sir? 15,000 rupees. Now check whether this 15,000 rupees is separable or not. Now check whether this 15,000 rupees is separable or not. Can I separate it? Say for example, I say for house property it is 10,000 and for other asset it is 5,000. So this 15,000 has come. How did I arrive at this 15,000, sir? For house property it is 10,000, for other assets it is 5,000 rupees. So if it is separable, if composite rent is separable, then whatever is for house property will be taxable under income from house property. Whatever is for other assets, it will be taxable under income from other sources. It will be taxable under income from other sources. Sir, what if I cannot separate it, sir? What if the composite rent is not separable? Then the entire amount, the total rent, total amount which you have received, that will be taxable either under income from other sources or under PGBP. So if it is your business to rent property like this, then it will be taxable under PGBP, or else it will be taxable, the entire rent amount will be taxable under income from other sources. So I'll just tax treatment in case of composite rent. Composite rent is separable. If it is separable, then rent for house property will be taxable under income from house property. Rent for other assets and services will be taxable under income from other sources or PGBP. If it is not separable, full rent, entire rent completely taxable under income from other sources or PGBP. Now sometimes what happens is the property which you are renting is not acceptable to the other person without other assets. The property to whom you are renting is not ready to accept your property without other assets, or it is not possible for you to rent the house property without renting other assets. In such cases, entire income will go to PGBP or income from other sources. In such cases, whether the agreement is separating the composite amount or it is not separating, the entire rent will go to PGBP or income from other sources. For example, I have a PG wherein I give room plus I give bed, I give a study table, etc. And I also give food, etc. In such case, I am charging 6,000 rupees. I know what is the breakup. I don't care. Even if you know the breakup, this property is not accepted by the other person without other assets. So if you want to rent this property, you are supposed to compulsorily give a bed, you are supposed to compulsorily give food, etc. In such cases, entire rent will be taken as income from other sources or PGBP. Or I am going to an hotel. I am going to a hotel. Even an hotel is a house property only, correct? House property means building and land appertaining to such building. If I am taking a hotel room on rent, obviously I need a bed in that hotel room. Obviously I need a television in that hotel room. Only then I am going to accept that particular room. So in such cases, the entire rent will go, whatever rent you are paying, that entirely will go to income from other sources or PGBP. If it is my business, it will go to PGBP. Next, sir, what if a person has a house property which he is holding? So what if the house property is stock in trade for a person? This is already discussed by us in our first video, but let me just repeat it. Sir, what if the property, if I am a builder, meaning what if house property is held as stock in trade by me? In such cases, see, house property is held as stock in trade. That means what, sir? I am a builder. I have constructed 8 flats. I have sold 6 flats. 6 flats I have sold. Because I have sold, the income will go to PGBP. Why, sir, it will go to PGBP? Because my business is construction and selling, constructing and selling. These are stock in trade for me. So this sale of this property will go to PGBP. The unsold flats is rented by me. I have let out this unsold flat. Whatever unsold flat I have let out or rented, the income from this unsold flat will go to income from house property. It will go to income from house property. Now what law says is, see, since this is your stock in trade, since this unsold property is your stock in trade, if you have not rented, if you have rented it, then it will go to income from house property. If these unsold flats are not rented, no, if the stock in trade or unsold flats are not rented, if they are not rented, then I am going to wait for 2 years. 2 years from the end of the year, in which construction was completed. I am going to wait for 2 years. Even after 2 years, if they are not sold or if you have not given on this property on rent, then after 2 years I am going to call them as, I am going to treat it as deemed to be let out property. Accordingly, I am going to tax it. So house property held as stock in trade, income from sale of flat, PGBP, income from renting of the flats, unsold flats will go to income from, it will be taxable under income from house property. Where the house property is held as stock in trade and it has not been let out during the previous year, the NAV of such house property will be taken as nil for a period of 2 years from the end of the financial year in which the construction was completed. From the end of the financial year in which construction was completed. Say for example, the construction was completed on 15th August 2022. So this year ends on 31st of March 2023. From here I am going to calculate 2 years till 31st March 2025. It will be treated as taken as stock in trade. After this date, if you are not giving it on rent, or if the property is not sold and if you have not rented this property, I am going to call it as deemed to be let out property and accordingly compute your income from house property. Okay. Sir, what will happen if the property is located outside India? For case number 1, sir, property is located in India, is it taxable, sir? Whatever income I am getting, is it taxable? Yes, it is taxable in India. So if you are resident, then also it is taxable. If you are non-resident, then also it is taxable if the property is located in India. Case number 2, if the property is located outside India and if you are a resident, an ordinary resident of India, it is taxable in India. It does not matter where the property is located, whatever rent you are earning, it is taxable in India because global income is taxable in India. If the property is located outside India and you are a non-resident or resident and not ordinary resident, if you have received the rent in India only, then it is taxable, else it is not taxable. Else that income is not required, you are not required to pay any taxes in India. So there are 2 questions with respect to this point, you can just have and go through. Now there is one more last concept left over, or last topic left over, which is section 27. Section 27 talks about what, sir? Deemed owner. Section 27 talks about what, sir? Deemed owner. Sir, what do you mean by owner? Sir, you said Rental income will be taxable under the head income from house property if two conditions are satisfied. Condition number 1, there should be a house property. Condition number 2, assessee should be owner of such house property. Sir, we understood the meaning of house property, building a land appurtenant to such building. Sir, what do you mean by owner? Owner means, owner includes, it is an inclusive definition. Owner includes legal owner, that is the registered owner of the property. It includes the beneficial owner of the property, and it includes deemed owner. Section 27 talks about this deemed owner. For example, what do you mean by who is this deemed owner? See, please note, the property is not in my name, but I will be deemed, it will be assumed that I am the owner of this property. Sir, when will this happen? Say for example, I have a property. This property was given by me to my wife free of cost or for inadequate consideration. I had transferred my property to my wife or free of cost or for inadequate consideration. Lawmaker says, Dilip, this is wrong. This is wrong. Though the owner of this property legally, the documents are in your wife's name, you will be called as deemed owner. You will be called as deemed owner, and accordingly, this property, the tax is required to be paid by you. If I have transferred the property to my wife free of cost or for inadequate consideration, though she is the owner, legal owner, I will be deemed to be owner of this particular property. So if an individual transfers the property to his or her spouse without consideration or for inadequate consideration, then the individual who has transferred the property will be considered as deemed owner. There is an exception except an agreement to live apart. So if we have divorced, etc., in such cases this point is not applicable. Or individual transfers the property to his minor child without consideration or for inadequate consideration, then that individual will be treated as deemed owner. I am transferring the property to whom? My minor child, except minor married daughter. Or holder of impartable assets. Some cases what happens is a trust is created and the trust will be the holder of the property. A trust is created and the property is transferred to this particular trust. This property is legally not divisible. You cannot legally divide this property or sell this property. Now this property is in the name of the trust. So the holder of this impartial estate is who, sir? Trust. The trust will be treated as deemed owner. Member of cooperative society. Many times what happens is, you would have seen people staying at apartment, or you would have seen this Gokuldham society in your Tarak Mehta Ka Ulta Chashma, some television show. So in case of an apartment, what happens? In case of an apartment, the entire building, the apartments which you see, individually flats are owned by these people. Say I am staying in an apartment, flat number 201 belongs to me, flat number 202 belongs to Akshay Kumar, flat number 203 belongs to Rishabh Shetty, flat number 204 belongs to Yash, flat number 205 belongs to Deepika Padukone, flat number 206 belongs to Noora Fateh. Now these flats, the owner of these flats individually is who, sir? The flats individually, we are the flats owner. Respective people are the flats owner. But if you speak about the land completely, the apartment as a whole, the owner of this apartment will be the association. It will be the association. So what they say is, though the cooperative society or the association is the owner of this particular building or flats as a whole, individual owner will get their own membership certificate or share. Individual member will have their own certificate. They will be given a document telling that this particular flat belongs to you. So that particular flat, I will be the deemed owner. Though this the building is in the name of the association, that flat number 201 belongs to me. No, I am the deemed owner of that particular flat. Transfer of possession of property, immobile property. Sometimes what happens is, during COVID, I had sold the property in the month of March, but the registration was not yet done. I had sold the property, I had given the possession also of the property, but registration was not done. Registration was done after 9 months period. For this 9 months period, who will be treated as deemed owner? It will be the person who is in the possession of the property. So if I have transferred the property to someone and the registration is pending, the possession is given to that person, but the registration is pending, I have received the amount, the person who is in possession of the property will be deemed as owner of that particular property. Similarly, if I have given the property property on long-term lease for a period of 12 years or more, the person to whom I have given this property will be deemed as owner of this particular property, provided the lease should be long-term lease for a period of 12 years or more. Okay friends, that is all from my side in this particular video. Let us meet again in our next video with our next revision. Till then, tada, bye bye, take care. I hope you enjoyed this video.